AIM-listed Dekel Agri-Vision, which has operations in the Ivory Coast, has recently traded shares at levels not seen since July 2018. A combination of high oil prices for Dekel products and progress at its Cashew facility, which is set to begin production there in a matter of weeks. Lincoln Moore is Executive Director at the business. He joins us now. Good to talk to you again. And it's a good opportunity to be able to talk about what's been happening with the share price, amongst other things, because clearly there's been a big improvement recently. As I said at the top, part of this I know is because of the rise in palm oil prices. Just before we get into one specific area, just wanted to give you an opportunity to explain now what Dekel Agri-Vision does, because over the last couple of years, you've sort of expanded your horizon, haven't you?
No, thanks very much for having me. Yes, we have expanded our horizon. We have for a number of years now operated one of West Africa's largest palm oil mills. We produce roughly 40,000 tonnes of crude palm oil per year. And recently we've moved into a process where we would like to diversify within Côte d'Ivoire, and we're in the process of constructing a cashew processing plant. So this will be our second production asset coming in at Q2. And this is all about our business model of being a small farmer cooperative relationship business that runs logistics and processing. So we can run that business model, we think, over multiple commodities and develop a large-scale diversified agribusiness.
Yes, of course, and this gives you the certification, of course, doesn't it, for sustainable palm oil production. Let's focus in, if we can, on the effects of this rise in palm oil prices, which, of course, comes in, I believe, at a time where it's convenient because of the peak season for palm oil. Explain more about how this impacts on your bottom line.
The prices, of course, at the moment, I think these are probably the best prices we've ever had since we started producing in 2014. So incredibly supportive. I think 2017 was our best year, and I think we averaged 680 euros a tonne, and we did revenue of 30 million and EBITDA of 4.5 million. So we're sitting at the moment at 796 euros a tonne. So we're optimistic we can exceed our record results of 2017. The palm price increase has really been nothing new over the last 12 months. Just pre-COVID, stock levels around the world were quite low, and we saw prices quite high. Then during COVID, there's a short dip where all commodities and speculators pushed down commodity prices, but we've seen through 2020 a real run in palm prices back to $1,000 at the right time for us as we hit our high season. So it's great to be operating, and we need to, of course, perform a very smooth high season to take advantage of these prices.
Yeah, explain a bit more about, if you can, about this contentious issue around palm oil production. As I said, that you have this sustainable production facility ongoing, and I believe you also applying for some RSPO certification. Is that right? What sort of what does this give you in terms of legitimacy for farming palm oil?
ESG, environmental, social and governance, all aspects are really important to us. And our whole business model from the social perspective is about relationships with cooperatives and small farmers. So that's been at the essence of our whole business strategy from the start. The environmental side is no different. We take it incredibly seriously, and the mill and operations were always set up with that in mind. We're one of the only mills in West Africa running a palm effluent treatment plant. It's just one simple example. So the next step is we're an RSPO member to become certified, and there's a process to do that. It's quite rigorous. There's a lot of administrative aspects as well as environmental aspects to tick off. And we're now at the penultimate stage. We have ProForest, it's a Oxford-based group, performing what's the final pre-audit, we think, and then we'll have the certifiers come, and we hope to have RSPO certification by the end of the year. It's important for us environmentally, but I think it can also assist us commercially with products trading at a premium internationally that have the certification.
What's the outlook looking like for palm oil production? Are you able to gain extra capacity at all? What are your plans?
The palm oil mill it already has room for natural organic growth. It can process up to 60,000 tonnes per year, and we've been around the 40,000 tonne mark now for quite a few years. What we're really waiting for, we always knew this with the palm oil mill, that we were going to exceed the local capacity, was the planting from small farmers, which has been in huge volumes over the last 6 or 7 years. It's just now starting to come production. So we've got a lot of organic growth to come for that business, and we'll talk about cashews in a second. It's an entirely different story where there's a sheer overwhelming supply of the raw material, which is exciting.
Yeah, well, let's take a look at the cashew side of the business, because you said it's a little bit of a step away from what you've been doing before. You've got the production plant in progress at the moment. My understanding is it is, as I said at the top, just a matter of weeks away before we see some sort of production coming through there. Just explain where you are on that process, and indeed whether or not Q2 remains your target for the beginning of production of the cashew product.
No problem. We chose cashews, as I said, it fitted into the broad strategy. It's a similar business model. We're dealing with thousands of small farmers and their cooperatives, and we assist with the logistics and processing of the raw cashews into a sellable product that we will export most likely to Europe or the US. The construction is going well. We have the manufacturers of equipment from Italy, Ultramari, their whole team on site. That's under a turnkey contract, assembling the equipment. People can see on our websites the infrastructure that's been built already, and the machinery going up. So Q2 is still the goal for commissioning of the cashew processing plant, and first production very closely and thereafter.
Yeah, I believe you've just increased your interest to 70%. Is your view and your intention to go for the entire ownership, or is that something that's either one, not available to you, or something that's not particularly in your interest?
We would love to increase our interest further, but the other partners, I don't think are active sellers at the moment. So I think they understand, like us, that there's a significant amount of upside to the valuation of cashews once it starts producing them. Just to give you some gauge, the 16.7% that we picked up was an 100% valuation of the business, of around €7.5 million, and most analysts have the cashew processing plant valued at nearly €40 million. So it will be a challenge. We think we've done a really decent job for Dekel shareholders to get to this stake on a very modest consideration, and we look forward to proving the valuation from the analysts, because that valuation alone is more than our entire market cap.
Yeah, what about production and how quickly it's going to ramp up? What's your capability there, and how long is it going to take to get to maximum capacity?
So most importantly, to start with, there is a mass excess of raw cashews. I talked about palm earlier, where we're waiting for the feedstock to build up to get us to capacity. It's not the same situation in cashews. There's huge excess of raw capacity, and traditionally it was exported raw to India and Vietnam. So we have a lot of confidence that we can get whatever raw materials that we need, which is a really good starting point. We test traded cashews for a couple of years, actually, to ensure that was the case before we launched into the construction program. So to start with, we built the processing plant. It's a 15,000 tonne per annum raw cashew processing plant, which is, if that would run over 3 shifts. That's to start. We will start with 2 shifts, so we run at 10,000 tonnes capacity. So ideally, in the second half of the year, we'll do close to 5,000 tonnes of raw cashews through the processing plant. We could, of course, then organically grow quickly to 15,000 from next year if everything seems to be working well in terms of the gross margins and the smooth operations. And then all the infrastructure has been put in place to allow us to upgrade to 30,000 tonnes per annum. And we're being cautious in terms of what we're saying to the market in terms of making that upgrade. But clearly, if it does what we think it will do, and the margins and the process is smoothly, we'd be looking to go for that upgrade, because we feel very confident the raw material is there. And it's getting to an exciting point. We're only a few months away from first production, which is great.
Yeah, and of course you've raised money recently, haven't you? I think to fund all this. How's the balance sheet looking?
Very, very good. We had a very active January. I mean, it's been part of actually 2-year strategy. Really, one is to turn our debt facilities into, let's call them, super long-term debts, i.e., there's significant principal grace periods at the start. And the idea of that was to create room for the business to grow into cashews and then to expand, we think, into a third commodity. And also we have ambitions in clean energy. So that culminated actually with we put in place a bond facility in Côte d'Ivoire, which is credit rated, a facility up to 15.2 million euros, which we initially have taken 5.9 million euros, which is transformed our balance sheet from into a much stronger position, and now we've done the equity raise. So we've effectively added nearly 10 million euros, around 10 million euros to our balance sheet, and it's a very important moment, really, with the cashew starting. I think it's important with any construction and commissioning project to be well funded, and with our balance sheet's in the best shape it's actually ever been since it's listed, and I think the whole business as a whole is in probably the most optimistic place it's ever been.
And of course, that puts you in quite a good position, doesn't it? Because my understanding is you're adding a third commodity to your portfolio. How's all this going? I believe you've done an internal feasibility study. Explain what's happening here.
So the strategy at the moment is very simple. We're very much focused on the core business, the palm business, delivering a good high season with these good prices. I think there's 4 million plus of operating cash flow that we can deliver over the next 6 months with a reasonably solid production high season. And clearly January we did 52% higher than last year, so it was a really great start. The next thing obviously is it's not as complicated, the construction of the cashew processing plant, as the palm oil mill, but nevertheless there's a huge focus on bringing that to production and within the timelines and operating that smoothly as quickly as possible, and then letting the market know what the gross margins, because we believe they're a lot stronger than the palm oil will be. That's certainly going to be a challenge over the next 6 months, but clearly we've got one eye on the present and one eye on the future, and a third commodity which we think complements the palm oil. We can do that, we believe, also on a low cost basis. Has gone through internal feasibility and is now in external feasibility. It's similar to cashew in some way. There is some excess raw capacity. So I think it's something that we'll probably turn our attention to more in the second half of the year once the cashews is operating. But certainly we're keen to add scale to our business. We've got a cost base, which won't change much. So every new commodity we add, the gross margin has a huge impact on our profitability. So we've got a great infrastructure and balance sheet in place to deliver 3 commodities and potentially more in the future.
How much do you think is all this priced into shares? If we take a look at the share price chart, as I said at the top, that we're at levels now not seen since midway through 2018. So things are looking good. I mean, this is a chart showing the individual daily incremental movements. But I mean, as you and I were talking before we went to air, and you pointed out that you've been a lot higher than where you were 2-3 years ago. But obviously, the company is very different now than it was 2 or 3 years ago when it was mainly just palm oil. Gone into cashews, you've got these plans to expand again. What is now being priced in at this level here for Dekel Agri-Vision?
Yeah, you touched on 2 years ago, I think, with these level. But if you go back one further year, we were 12 to 13p. So we're still well off where we were. That was when the palm business went through a good year in 2017, which I mentioned previously. It's obviously been a very difficult 2 years of palm prices, the worst 2 years in over 20 years. And that's the reason that the stock price shifted downwards. And now we've come out of that. The balance sheet is strong. We've got palm oil production and pricing now for the first time in 3 years, very supportive, and cashew coming into production, which we think is in time going to be a bigger business and a better margin business than the palm oil. So we've started to regain some of that ground, which is fantastic. But I think our market cap today is £26 million. I think it just values in the palm oil business. I don't think there's much value there subscribed to the cashew business, which, as we say, we think is a more profitable commodity for us to enter. So I think we'll see some further increase in the share price as we prove out the palm oil high season, and people start to turn their attention to the cashews. And I think there's still some plenty of upside from here.
Yeah, look, Lincoln, good luck with everything, and we'll look forward to hearing about the production at the Cashew facility in the second quarter of this year. It's good to talk to you again. Thanks indeed for joining us there on the line from Lisbon. Lincoln Moore is Executive Director at Dekel Agri-Vision. For more videos from us here at IGTV, join us on Twitter at IGTV and subscribe to our YouTube channel.